Okay, guys, looks like it's all working. Just bear with me one moment, and we will get going. Just need to set up my desktop so I can see you all and see your questions, and then we can get going. Okay, so thanks everybody for joining. I want to go through my disclaimer, our Forex.com disclaimer first. This presentation provided solely as a courtesy to the aid and education of our customers and prospective customers. It will discuss risk management concepts, strategies, and does not include the recommendation and endorsement of any particular security, chart pattern, or investment strategy by Forex.com. The discussions of a particular market or product should not be construed as an offer to sell or a solicitation of an offer to buy in any financial market whatsoever. Presentation has been prepared without regard to the specific investment objectives, financial situation and needs of any particular recipient, and we don't guarantee or verify the accuracy of the information or commentary provided. Futures, options on futures, foreign exchange and other leveraged products, they involve substantial risk of loss and are not suitable for all investors. Spot gold and silver contracts are not subject to regulations of the US Commodities Exchange Act. Contracts for difference, otherwise known as CFDs, they are not available for US residents due to regulatory reasons. Okay, everybody, let's put that away and let's get on to the interesting stuff, shall we? So to start with, let's just get going here. I'm going to put this up here, which is dollar yen. But I'm just really interested in you all, just asking you guys a question, actually turning it around just a little bit. If you can just write in your chat box whether or not you think that this month's payrolls are important or not important. Obviously, they're delayed. This is actually payrolls Tuesday. You know, usually on a Tuesday we're kind of planning ahead for the week. Well, now we've got something kind of on our plate, an opportunity on our plate. But do you think this information is useful or not? Will this information actually help your trading, do you think? If you just write yes or no in the comments box in the chat section, that would be great, and then we can just discuss it. So no and yes. It's even so far, even Stephen so far. We start with half of you basically saying yes, it is going to provide opportunities, and half of you saying no, it's not really. I do know, obviously, you know, the one thing to note is that this is old data now. I know some of you don't even like trading the non-farm payroll, so that may be one of the reasons why you're not that interested in this month's data. I think it still is quite important. It's one of those things to put on kind of to the back of your mind, and just to remember, just to, like, you know, just look at it, digest it, even if you don't want to trade it. Just make sure that you're on top of it, you know what's going on. Largely because you know, this is, you know, the dollar potentially going forward, whether or not it trends in one direction or the other could be dependent on Fed tapering, and this is a key component of that. Even if the data is 2.5 weeks late, even if the data dates back to, like, you know, 3 weeks ago now, you know, it's still important. I think as well, another reason why the non-farm payrolls is important is because it will really tell us the strength of the economy as we went into that government shutdown and the whole debt debacle. Obviously, the stronger the economy, or the more jobs that were created before it, could have potentially, you know, weathered the storm over the last few weeks, which is now over. Of course, that storm is over. So there is, you know, there is some merit, certainly, even if you don't trade it, to just look at it. Now, I will go through a couple of trading strategies for those of you who do want to, who do use it as an opportunity to actively participate in the markets. But this is dollar yen, and of course, whenever you talk about you know, non-farm payrolls, I know some of you used to join me on a Friday when I used to do the Friday morning ones, but we used to, you know, and it was always, I'm sure it was etched in your mind that, you know, if it's payrolls, you've got to look at dollar yen, because that is, you know, by far the biggest, you know, so sensitive to what's going on. They kind of go hand in hand together. So for those of you maybe new to FX, or maybe new to, say, trading economic data or trading the payrolls report, dollar yen is a great one to start out with, because it is very sensitive. It's very sensitive to changes in US monetary policy. And as I said at the start, because the unemployment rate, or the employment rate, has such a big bearing on monetary policy, that's why it's so important. So look, this is where we are. This is a daily chart, and I'm showing you a daily chart just to point out a few features. Firstly, these two lines here are the 50 and 100-day moving averages. As you can see, we're testing them right now. They come in between 98.40 to 45. We've been rebuffed from there for sure. Right now, we're just below those levels at 98.35, but the pullbacks have been very, very shallow in the last few hours, and it does look like the market is certainly going to at least try to push us back up to those levels. So we are seeing kind of a bullish expectation. Those of you who traded in the markets yesterday will have noted there was a slightly better tone to the US dollar, and largely it's because we do have a lot of economic data coming out. Okay, fine, it's delayed economic data, but all that economic data is important because, you know, if it's positive, then essentially the dollar may rally. So that's kind of a key thing, pointing out that. So even though it's late, it's kind of better late than never in this economic data. Now, Martin, you just mentioned that dollar yen looks very trapped. Indeed, it does. You know, if you look here, we could actually. Just bear with me one moment. As you can see here, I mean, we've got a way to go really before we can say that we're kind of, you know, out of the woods here. We need to get kind of above 98.50. I agree with you. This 98.40 level is really key. If we can get above there, then it opens the way to, let me bring up another chart. So, there are some, you know, key levels on the upside that we are watching. This is their dollar yen as well. Sorry, this is just another chart. I'm trying to show you both of them. So as you can see, it does look very, very chapped. I think that's a very good point, Martin. We're also getting a bit sticky around these levels as well, which is just around about the daily Ichimoku cloud. Now, the clouds are, you know, they matter for dollar yen because they're a Japanese way of looking at the market. We've remained below that cloud. The cloud base comes in at 98.70. That's a key resistance level. So if we get above this 98.40 level, then say, for example, on the back of a better payrolls number, then it could open the way to 98.70, and then to this cloud top here, which is comes in at 99.15. Now, the clouds, why are they important? Because if you get above the base of it, that is the end of a technical downtrend, and above 99.15 in dollar yen right now would be the start of a technical uptrend. So we are traversing some very important levels, and Martin, I think you're right that things can look very trapped when you're getting to these levels. So there's a bit of indecision in the market with a slightly moderately bullish bias, as you can see here, or momentum is mildly to the upside here. As you can see, this is the daily MACD. But what about from a more intraday perspective? I know some of you are only really interested in it from an intraday perspective. As you can see here, this 98.40, nice move higher here, 98.40, bit sticky, moving sideways a little bit, and the momentum indicator would also suggest that we're moving sideways. So I would say that in the lead up to the payrolls, we're now only kind of 3.5 hours away from that. We could potentially just move sideways just a little bit, just be a little bit cautious as we wait for that data to come out. So, you know, dollar yen is important. 98.40 is a key level. Now, just a few things I want to show you. I want you to maybe when you're finished this, let me just get you a nice link so that you can read my latest piece on dollar yen, which will go through some scenarios, for example, something that's above consensus, in line with consensus, and below consensus. What could happen to dollar yen then? Great, and you can actually read that yourselves here. And please do go ahead and read it. It would be great for you to see that. And, you know, overall, as I mentioned, consensus, or I may not have mentioned, but consensus is 180. 180,000 jobs created. That's up from 169 in August. Our prop model here at Forex.com is predicting 175,000. So roughly in line with the market consensus. In terms of, you know, what else has been moving today, we will say let's just pull up pound. This is cable. This is sterling versus dollar. And it's actually a mirror image, isn't it? Right? So pound has come down as the dollar has rallied. Partly there are a couple of reasons for this. You know, obviously there's expectations of potentially a better payrolls number, which is helping the dollar. There's also been a lot of profit. There was also a lot of profit taking here around about that 160, above this 162 level, which from Friday. So that also weighed on the pound. And added to that, we've also got some key data coming out of the UK now this week. So we've got Bank of England minutes tomorrow, and then on Friday we've got the all important Q3 GDP number. So, you know, it's no wonder really that we're backing off from these, you know, multi-month highs. If I just go onto the daily chart just to show you, you know, where we are here, this is going back a whole year. We got so close to this 162.70 level. Now there is a bit that concerns me here, that our last push higher, so that came after the government shutdown in the US, which perversely for some caused the dollar did not act as in any way a safe haven. It fell very sharply, causing a lot of the G10 dollar crosses such as or dollar pairs to fall off a cliff or cable to rally. So it rose very, very strongly, but didn't quite make it to that 162 above that kind of 162 level. In fact, it failed at that level. So we've got a bit of a situation where we've got a bit of a lower high. From a technical perspective, that suggests to watch out that, you know, potentially momentum isn't quite there, that the bulls aren't quite as powerful as they have been in the past. I think, you know, obviously we do have some, you know, key economic data coming up, but that 162.70 level, intraday that was kind of 163.80 actually we spiked up to, but 162.70 to 163 is a massive level and a key level that people are willing to take profit at. So remember, we've had a fantastic run higher. Since July, we're up more than 10%. No wonder people are trying to take profit around about these levels. Remember, if you can cast your mind back, we were below 150 in July. We were at 148. You know, we're now, you know, above, you know, comfortably above 160. So that's kind of worth looking at. Now, in terms of kind of levels to watch out for, you know, we've, just looking at like purely just from a technical perspective, just looking at it here, we've got this 161.10 level, which is a 100-hour moving average. That seems to have capped the downside for now. And then if we get below there, then we're probably looking at these lows from last Thursday. That was before that massive push higher. So this long green here was kind of the hour after the US government came on board. So you know, quite significant there, and we managed to kind of just push higher the whole way. So, you know, from a momentum perspective as well, obviously momentum very much been to the downside, but we are flatlining a little bit, you know, suggesting that, you know, the selling pressure may ease off. And that's very, very normal when we actually see events like we've seen, or when we're waiting for big events like what we've just seen. You know, the pound certainly is trading on the soft side, but I've heard that flows have actually been quite quiet. But there has been some dip buying. So as we get close to that 161.15 level, it is attracting just a little bit of buying interest there. And overall, you know, the range seems to be kind of 160.80 to 161.5. And the markets have faded the extremes in the last 24 hours, and we expect that to persist until we get that NFP number. Now, if we were to get a strong NFP number, that could boost the dollar further and just weigh a little more on cable. So where could we go at that stage? Well, at that stage, you'd probably be looking for these lows, maybe below 160. If we were to get a much stronger number than expected, say 200k plus, that's kind of knock them out of the water level. We could fall down to this kind of 159.70 level, which were the lows prior to the US resolution of the US issues. So that's certainly worth looking at. Obviously in sterling as well. It's worth taking a quick look now at euro sterling. And euro sterling's had a bit of a nice recovery, as you can see there. Just picked up very mildly. This is an hourly chart. Let's take a quick look at I'll just get rid of that. Bear with me one moment. It wasn't meant to be there. I know this chart is a little bit messy with all those lines on it. But as you can see here, you know, it picked up quite nicely from those 83.50 levels. We're still getting stuck though, just ahead of this 85 level here. So, you know, we're at a key kind of resistance level, mostly trading sideways with a mildly bullish bias in the very short term. And that's largely because the dollar is kind of really king at the moment. So that is having an impact on euro dollar and cable. And because this is a cross between euro and cable and sterling, what we're seeing is kind of, you know, it's a wallflower really. It's just moving sideways and is moving on the back of what's going on in the other major pairs. So, you know, there is some selling interest coming in between as I said, just below that 85 level, between kind of 84.80 to 90. We have heard that there are stops above 85.10. So if we are to get above 85.10, then potentially, that could actually trigger a little bit more buying interest. If there was a surge lower in cable, for whatever reason, maybe it would come on the back of some weaker economic data out of the UK, then we could surge higher. However, I do think that this cross is going to be very much determined by economic data, by fundamental data. So I think investors will be quiet in the lead up to that because, of course, we don't know which way that data is going to go. Data, in terms of preempting data can be a bit of a silly thing to do because, again, we don't know. We have no idea which way it's going to go. And I think euro sterling, I wouldn't be surprised if it traded sideways until we get that all important Q3 GDP data out of the UK on Friday. The market's expecting a big number, 0.8%. There is a risk that it could be stronger now. If it is stronger, we could see something like euro sterling just reverse course again back to that 83.50 level. So, do watch out for that. Lots of opportunities for those people with a fundamental bias out there. Not just today, but obviously Friday as well is important. Now, euro, let me just go through it and then I'm sure I'll take some of your, questions. But this is a daily chart and as you can see, still very much in a nice uptrend. We are pulling back a little bit. But we are trading in a very, very tight range. I'll show you the short-term chart. As you can see, such a tight range there. It doesn't often persist in the tight range. Oh, let me just close that, get my crosshairs. Doesn't usually persist in a range this tight, but we are trading kind of 136.850 on the downside, and we haven't been able to get to that 137 level. Now, just going back to the daily chart very, very quickly. I'll put these things away. If I move it this way, yes. So here we are. 137, we're hovering around about that 137 level. This intraday high here at 137.11 is the key level that a lot of people are watching. Now, we expect euro dollar to trade in a very, very tight range, really, until payrolls. But there could be a lot of volatility, actually, as we get those numbers. Because I think, particularly for me anyway, it's the extremes that are more important for the market here. If we're going to break the range one way or the other, if we're going to break the range to the upside, we're going to need to see a very weak payrolls and in the US. And if we are going to break it to the downside, say getting below this 135.20 level, even below 135, we're probably going to need to see a payrolls print above 200k or more. There is good support, in the very short term, 136. If we do break this 136 level, so this comes in around about here, so 136.30, 136 to 136.30. If we break those lows, and it could see kind of a further liquidation, potentially back down to these 135 levels, maybe even 134.75. I would also, obviously also point out though that if we get a number roughly in line with consensus, then we may just try trade sideways. And we'd probably have to wait for some more economic data just to kind of give us a view. So near-term supports then in euro dollar would come in at 136.50, and then as I mentioned, that 136 to 136.30 level ahead of this 135, say 65 level on the downside. Ray, you've asked about dollar yen. I did mention that at the very, very top. I probably won't go back over that, but basically dollar yen is testing a key level at 98.40. If we get a good number, then it opens the way to above 99.15, which is the top of the daily Ichimoku cloud. Very bullish development if we get above there, and if we don't, then we could see back down to 97.25, which is the 200-day moving average, and should act as very solid support. Ben, do you think that a good number could be bad for the dollar as that will stall tapering? Actually, a good number possibly wouldn't necessarily stall tapering. In fact, if anything, I think a good number would be good for the dollar because it could potentially get some of that stalling of tapering back on the plate. So remember, a good NFP number, good non-farm payrolls number, say 200 or plus, could potentially bring the mind's focus back to the fact that the Fed could start tapering. Maybe they won't at the end of this year because of problems that have been going on in the US. But fiscal problems, once those fiscal problems are over, then it certainly gives a mean way. So I think maybe what you were saying, Ben, or what you're trying to get at, Ben, is that, sometimes good economic data can be bad news, for the US dollar. In fact, that's been a traditional, issue. But I think at the moment, whenever there's been kind of no tapering or tapering expectations have been scaled back from the US, that's tended to be dollar negative. But if we get a good payrolls number, I think some of those tapering expectations will be priced back into the market, and that will be positive for the dollar. So anything that looks like tapering could happen, or that's good economic data that supports tapering sometime in the future, that to me could be good, could be fairly positive for the dollar in this environment, largely because the market is very focused on what central banks are doing and when they're going to do it, and normalization of policy. So a good payrolls number today, though it doesn't guarantee tapering, I agree with that point, it could certainly lead to be a step in the direction of normalization of policy by the Fed. And I fully take on board the fact that is a very long journey for sure. Pound fire, 170, a good number. Why would it mean stronger dollar if 180 expected? I think, I kind of said, well, I don't think I said 170 was a good number. 180 is expected. Our prop model is looking for 175, so roughly in line with expectation. But basically, I'll just run through my kind of scenarios very quickly, Pam. So 200 or above 200, to me, that's a great number. 200,000 payrolls is always a magic number, because that's the number of jobs the US needs to create, to organically cause the unemployment rate to drop. I think something around about consensus between 170 to 180 could actually cause, a sideways price action. We may see a bit of a spike higher, because that was higher than it was in August. But I think it would be short-lived, and then we'd kind of we'd stay within our recent ranges. And then I think, say something 160 or lower would be considered as quite negative, and that could weigh on the dollar. So they're my views just from the dollar side of things. Rocco, can we trust non-farm payrolls? We know it was preferred in a rush, and why were they in such a hurry, except they need to put out a good number? Just smells funny. Oh, right. So Rocco, maybe you're more of a conspiracy theorist. It was put out in a bit of a rush, but normally it only takes 3 days to put together. Normally it would take 4 days to put together, say, but we've had payrolls actually put together in a much shorter time period than that, because sometimes you get it the first Friday. That could be, say, the second or third of a month. So that's very normal. I mean, once you've got that data, this is all electronically organized. It's put out there. I would say one thing, if it's such a hurry to push out a good number, I don't think they've had a bias to push out good numbers, actually, because if they did, then I think they would have started pushing them out before the summer, before we started seeing these quite muted, fairly boring, slightly disappointing non-farm numbers. So I don't really think the day that it's taken to put it out, or the fact that it's taken 3 days is really relevant, actually, at this stage. So do we expect a weak number? It's so hard always to tell with payrolls, Rocco. My view, and those of you who maybe have read my book or joined my webinars in the past will know, payrolls isn't my favorite thing. I love looking at it. I love the excitement it generates, but I prefer to sit, watch what happens, and then digest, because I think this number can go one way or the other. There's so many outliers, so difficult to come up with one number that's really representative of the whole US economy, and how many jobs it's creating, that I find it quite difficult to trade. And I think if you look, it can often vary quite substantially from expectations. So the market expects, I think, a fairly good number, a pickup. In this environment, rather than trying to second guess payrolls, you've got to look at kind of maybe market consensus is a good one to look at. Certainly is a good benchmark to say what's good or bad. So market consensus is 180. It's a fairly solid-ish number. It's not great. It's fine. It's a pickup from August, which is positive. But obviously anything above 180 is positive. Anything below, kind of, as I said, around about below 160, I reckon, will be considered quite negative. So that's key there. Now, obviously, it is very easy to get caught up in the payrolls madness. I also think that very much worth watching is Australia. For tomorrow, tomorrow is the 23rd, so very early, London morning, we get quarterly CPI from Australia for Q3. They only release some of you will know that, they only release their inflation data on a quarterly basis, and the market does expect a drop in inflation, actually. Now, there's 3 different measures of the inflation they look at, which is just your bare standard CPI. They also look at trimmed mean, which is more of a core measure, and then weighted median CPI, which is, again, the number actually that the RBA looks at. That's expected to moderate from 2.6% to 2.3% in the third quarter. Still within the RBA's preferred range, between 2 and 3%, but obviously it's falling. What could that mean for the Aussie? Well, if we get a number weaker than expected, I think that could weigh on the Aussie, because it could potentially give the Bank of Australia, or the Reserve Bank of Australia, more reason to keep their negative bias, potentially even to cut rates further down the line if they think inflation is an issue. Let's take a look at Aussie, because it's had a really nice push higher there. As you can see, stumbling a little bit here at the 200-hour moving average, around about 96.70. Just want to bring you my other chart to get a nice mix. These are Bloomberg charts, by the way, guys. They don't necessarily reflect prices that we offer in Aussie here at forex.com. But as you can see here, just even from a daily perspective, this 97.50 level is key, particularly because there's such a huge event risk, and Aussie is a risk sensitive currency. So anything that can move risk, like a non-farm payrolls report, it's worth just knowing your levels potentially. We've got 97.50 here, 97.55, say, the 200-day moving average is the level to watch on the upside. But we are stalling a little bit just ahead of 97, pulling back a tiny bit, but the pullback so far has been very, very tight. We're trading in a 50 pip range. As you can see here, that doesn't tend to persist long with Aussie. So combined with non-farm payrolls today and crucial CPI meeting tomorrow, there is so much fundamental risk, definitely worth watching. I think that, on the upside, if we had to break higher here, get above that 97 level, it brings us to 97.50. And because we've had such a run higher, as you can see here, the risk is that we get data disappointment, maybe a positive surprise out of the US and a negative surprise out of Australia could really weigh very heavily on the Aussie, potentially pushing it back to this 95 level in the short term. Euro Aussie looks interesting. Do I have a relative strength opinion on both economies? Euro Aussie is interesting. I would say that kind of both economies are in kind of a similar-ish situation in the sense that they have been slowing down but look to have maybe found their feet a little bit. Euro Aussie obviously it's fallen quite sharply as the Aussie has recovered, stalling a little bit here above that kind of 140-150 level. I mean, when you think about it, we're now back at levels that we were in back in July. Current divergence on daily on MACD. Let me just bring up my other chart and we'll just go through that quickly. So this is the MACD. As you can see here, it has turned lower and we're kind of moving sideways a little bit in Euro Aussie. We have kind of traded with daily MACD. Sorry, my fault. So as you can see here, we have certainly turned lower for sure. It looks to me like we're sidelining. I think today, on a day like today, Euro Aussie is going to be impacted much more by the Euro dollar rate and the Aussie dollar rate than by kind of itself, because we're not really trading on any Australian or Euro news. Now, one thing I would say though, that if we were to get weaker than expected inflation out of Australia, that could weigh quite heavily that could give Euro Aussie a bit of a boost, largely because we've seen weak inflation in Europe already. So, if we are to see weak inflation in Australia, that could be the one thing that stops them from doing, or from dropping their loosening bias, for the RBA to drop that. So, key levels on the upside just to watch. Obviously, we're trading around about 141.5 here. 143 is a big level. So that's certainly the kind of, you want to keep that in your mind. But overall, I think, certainly in the next, 12 hours or for the rest of today, this cross could potentially trade sideways. It does look like 141.5 is quite nice. It's quite nice support. And then just looking at it just from a slightly tighter range, this 141 kind of 30 to 141 level is also worth watching as well. So there's some nice short-term downside support that is worth keeping an eye on. Now, anyone else got one other question? I'm happy to look at one more. Hi Ray, great. I will see you at the World Money Show in November. I will not be at the London Investor Show in London this Friday. No, Friday's fairly busy, so we're not going to be at that one. But I will be at the World Money Show. Oil, yes, Mike. I want to show you oil. I also just want to do one quick thing because I put out a piece on Brent yesterday, which was really interesting. What I really want to show you as well is a very interesting. Some very interesting levels to watch in oil, and also just an interesting divergence. Obviously, oil is looking pretty. Saeed, I've really covered Dolly in very extensively, so I'm not going to look at that right now. But let's take a quick look at Brent, and then I'll look at WTI. So as you can see, oil has been, I suppose you could say it's been a victim of a slightly stronger dollar in the last few days, but it's also, it's come off quite sharply. It certainly hasn't followed stocks higher. It certainly hasn't been boosted by economic data out of China either, which has been quite interesting. Now, it's interesting. Let's just look at this chart here. We have held this 108.50 level, massive level of support, but we are trading kind of in quite a tight range. In terms of Brent, there are a few key data releases this week. PMIs, first reading of October PMIs from Europe on Thursday. Likewise with the China PMI, flash reading for October as well on Thursday. And then we also get the UK GDP. So there's going to be a lot of money. There's going to be a lot of expectation around there. Obviously, better than expected data could potentially, in Europe, could potentially boost Brent crude oil because it is tied kind of to the economic performance of Europe. But as you can see, oil looks a bit weak. You've also got to remember the domestic fundamentals as well. There's a lot of oil being produced at the moment. The US, for example, is really up there. It's a new player now, with Saudi Arabia and Russia as some of the world's largest oil producers. So that is really having an impact on supply. Supplies are increasing, and that tends to dampen oil pressure. So I think if we were to get back to this 111 level, this 50-day moving average, we could fall again, but there is good support at 108.60. In terms of WTI was interesting yesterday. It got below 100. Oh, just do this. Got below $100 a barrel. And it stayed below there. Now did find some good support there at 98.10. So there are some people picking it up. Rocco, US net exporter of oil right now. Indeed, it was actually earlier this month, the world's largest oil producer. So that can change on a weekly basis. But it's produced an awful lot of oil. It's really up there. It's changing the whole dynamics. And you've got to remember that there's an awful lot more oil in the world. And, what could that do? Could that take us back down to 90? The level we were at just in April, May? I think it potentially could, particularly if we see kind of a tepid recovery in the US. And maybe, again, Europe's recovery is coming from a low base. It's not going to recover. It's not going to boost things on its own. So that's kind of interesting there. I'm so pleased that you guys could join me. It's always great to have people on board. Please join me next week for more. Great. I look forward to next week. So good luck trading today with the non-farm payrolls, and we will hopefully I'll see you next week. Bye bye.